guys, welcome back to my channel. My name is Clyde, and today I'm going to talk to you about the concepts of securities-backed lending using MSTR as collateral. So if you're a shareholder or you like Bitcoin, you might like this video. First off, this is just theoretical based on my research and understanding. So what is a security-backed loan? It's basically you borrowing against your MSTR shares. So rather than selling your MSTR shares to fund your lifestyle, you instead get a loan and have MSTR as collateral for the lender. So how does security lending work? Here's an example. You invest £50,000 into MSTR stock. Over time, your portfolio doubles and now it's worth £100,000. You've 2x'd your return on investments. Instead of selling 10% of your shares, which would be around £10,000, and losing your ownership, you instead borrow 10% of your portfolio's value, still £10,000, but without selling the shares. Why would a lender give you that? Because MSTR acts as collateral. It's like insurance for the lender. If you don't pay the loan back, they sell your shares. So you can't just run off with their money without paying them back, otherwise the lender will just sell your MSTR to cover the money they lent you. Doing this, you get to keep your investment, you get £10,000 in cash, and you just pay a small interest rate, maybe around 6% per year. And the bigger your portfolio, the better rates you'll get. That's the idea behind securities-backed lending. It lets you use your investments without selling them. And you know what's cool about this? Is that you still get to keep full ownership of your assets. You don't trigger any capital gains tax, and you get to continue to benefit from any future price appreciation. So if MSTR goes up, you'll still gain unrealized profits from the stock. The lender just holds your MSTR as collateral, and in return, they'll give you cash at low interest rates, like I said, around 6% APR. The next question is, where can you do this? Where can you apply for securities-backed loans? You can do this through Morgan Stanley or UBS. These are investment banks. They will allow you to borrow against your MSTR shares, and you get cash with the ability to withdraw it to your bank. In return, they hold your MSTR shares as collateral, and you pay them a fixed rate of 6% per year forever. Here's the catch. If you ever want to stop paying that 6%, you'll need to repay the original loan in full. I'll give you an example. Let's say your MSTR is worth £100,000 and you borrow £10,000 from it. To stop the loan, you just pay back that £10,000. But here's the strategy. Instead of giving it back right away, you wait for MSTR to rise in share price. Your portfolio grows to £110,000, but you still owe the original £10,000 loan, and you need to pay that 6% yearly interests. So here are your options. Option 1. You sell £10,000 worth of stock to repay the loan. You'd stop paying the 6% interest rate, but by doing this, you'd reduce your investment exposure and you trigger capital gains tax. Option 2. You do nothing. You let your portfolio sit and keep paying that 6% APR. And if MSTR goes up, the interest becomes smaller relative to the growth of your portfolio. And option 3. You borrow more. Now that your portfolio is worth £110,000, you can borrow more. You don't need to sell anything, no tax is triggered, you just extend the loan and you pay interest on the new amount. These loans are typically offered to high net worth clients through private banks. Some call this strategy buy, borrow, die. You buy the asset, borrow against it, and never sell. The idea is to fund your lifestyle without ever liquidating your core wealth, but there are risks. If the value of your collateral drops significantly, you might get a margin call, forcing you to either add more MSTR shares or pay down the loan. So this strategy only really works best with strong conviction in your assets, in this case MSTR and Bitcoin. Now I'm going to tell you something about pension funds and retirement funds. What's the difference between retirement fund and pension fund? Retirement fund. See retirement fund as a big savings account. When you get to the age 50, you get a lump sum of money, ready to spend it all until it gets depleted. That's your retirement fund. Once you spend it all, back to flipping burgers you go. Now, pension fund, on the other hand, is pretty much a fixed income stream given to you on a monthly basis by the government at the age of 65. For example, the pension fund is around £12,000 per year. That's £1,000 per month, where you can just spend that to live your life happily. To get this pension fund, unfortunately, you either have to die first before you reach the age of 65, or by the time you reach the age of 65, you'll realize the government moved up the age bracket to 70. So now you won't get your pension fund until even more years. And once you get your pension fund, the money you get isn't enough to live comfortably in this highly inflated market. That £1,000 feels like £100. Why am I saying this? Well, it's because living under the fiat standard sucks. They really want you to pay your taxes, die first before you can get any funding, after all the time and energy you spent working and contributing to your pension and retirement funds. All you really did was fund the asset managers who took fees for every contributions you made. Then next thing you know, heart attack, cancer. You died before you can even get those funds, while they keep the rest. So what can you do instead? Here's an action plan. Live under the Bitcoin standard, my friend. You work a job, get paid, and then use that cash to buy MSTR, either through an ISA, if you plan on using this as your retirement fund, or through a regular individual investment account, so that you can apply for securities-backed loans. This will be your pension fund. You get it? Your invest account is your pension fund, and your ISA is your retirement fund. Now here's my portfolio worth just over £80,000. This is in my ISA, a tax-free capital gain portfolio. I see this as my retirement fund. Your ISA should act as your retirement fund. On the other hand, an individual invest account should be seen as your pension fund. Now, I'm not using my invest account through Trading 212. Instead, I'm using Interactive Brokers individual investment account. The reason I have two is because I'm about to reach the FSCS limit of £85,000 on my ISA through Trading 212. I want to diversify and make sure I'm protected £85,000 as well through Interactive Brokers. The last thing I want is to go beyond 85k, and then next thing you know, Trading 212 shuts down. So this is why I'm using Interactive Brokers as my invest account rather than from my Trading 212. Now, an individual invest account should be seen as your pension fund. You must contribute to your investment account and reach a portfolio worth £250,000 using MSTR in this case. Some people will be like, whoa, that's a lot. That's not possible. It's totally possible with MicroStrategy, with MSTR. They move 2 times the returns of Bitcoin, and we all know that Bitcoin is designed to go up forever because fiat is designed to go down forever. The reason you want to build a portfolio worth £250,000 in your individual invest account is because you want to transfer that portfolio either with Morgan Stanley or UBS, and from there you can apply for securities-backed loans. This is the better alternative to a pension fund. You'll be able to fund your lifestyle by borrowing against your MSTR shares through these investment banks. Am I making sense here? Remember, your pension fund can only be accessible to you when you reach the age of 65 plus. If you keep buying MSTR over the years, it will compound over time, much bigger and faster than what your pension funds and even retirement funds can get you. Reaching a portfolio worth £250,000 takes time. This isn't an instant gratification plan, it's a long-term investment play. If you're age 30 and you keep investing in MSTR, then by the age of 65, I can assure you your portfolio will be worth over £250,000, which will be enough for you to qualify for security lending with Morgan Stanley. You're funding your lifestyle through these loans backed by MicroStrategy. No need for weak pension funds, no begging the government for help, and you become more of a sovereign individual. And lastly, I'll tell you about the risks. If you are going to borrow against your shares, keep it safe. Only borrow 10 to 20% of your portfolio and make sure your MSTR is up more than 100% return on investment. That, in my opinion, is the safest way to do this. The riskiest way to do this, don't be up 100% return on investment and borrow more than 50% of your portfolio. That's what you shouldn't do unless you have a death wish. That's like playing with fire. Debt is a double-edged sword. It could either work for you or against you. Just be smart about it, bro, or how Gen Z BTC would say it, lil bro. If you learned something of value, I'd appreciate you leave a like and subscribe to my channel for more videos like this.